Howdy doody, everyone. Who remembers Howdy Doody? Hi, Glenn. How are you? TGIF, everyone. Brock, how are you? Everyone had a decent week. Been some plays. Doing pretty good, Brock. Okay, so yesterday, remember Blake heard that I was talking about crude and he said it was peeling off. And when I was doing my presentation, we were on drive two here. I said, you guys know what I look for, right? So we had this surge. Yeah, Forex gal. So here's drive three and confirmed high, diverged, and even on this spike, we barely got above 70, 86 or so. All right, so this is a top picking exercise. We're not going to have any kind of confirmation that were bad until we get underneath this confluence here around $60. You have a moving average there. It's throw over the way I had the trend line drawn anyway. This is I'll have to look at the weekly. And we are still higher on the week. It's still a positive week. So you keep that in mind. And remember, people say never go home short crude on a Friday. But anyway, this was the line I drew it off the spike was due to that attack on Saudi facilities up here. Okay. So we really need to close back inside. And here's your shorter term view. And that's interesting too. A lot of moving averages on different time frames are pointing towards $60. So I know it's a big round number, but it's also a BTO. No, BTN. It's a big technical number, not just because it's round, but because of some technical events that occurred here. So everyone cool on that? So, I'm still trying to top pick it. It's going to take some type of sell off, I think, in these, which are still levitating. We haven't blown out the 4-hour divergence yet. It's not classic. It's not clean because, um, although if you go all the way back here, we've been diverging since the end of November around Thanksgiving or so right here. But I teach that if you have to go and, figure out what the reading is for the RSI compared to any others, it's not a divergence because it should be glaring. Okay. It should be glaring like oil. You don't need a magnifying glass to know you had a divergence here, right? There was a confirmed high, had two new highs, and I don't need to go and look at this reading, do I? Because it's so obvious. So here's a good rule for you when you're looking for divergences. If it's not obvious, it doesn't count. How about that? Simple. Write it down. If you can't eyeball a glaring divergence, forget about it. You're trying to rationalize it. You know how I know? I've rationalized many trades over my career. All right, so if this ends up happening, let me get rid of me. Everyone have a Merry Christmas, but let me get rid of me. So if this is going to happen, where's there an opportunity? And Blake was talking about Canada being that real major support. And I've been noticing how we've, keep getting, we had lower lows and we're diverging. That's a 4-hour time frame. The 1 hour really doesn't count. So we have this falling wedge here. And look at where it's anchored. It's anchored up here. So if we get a breakout and it fulfills its objective, then it could break this weekly line right here. Okay. So there's your formation. I'd call this, probably a descending triangle, but I'm thinking if there is a break in crude that, this has been the recent rally in crude, then maybe we get this push up. And look, and this is one of the reasons. So, besides divergences, you look left, and, at this reading here on the weekly, my assumption would be that this could be a high, but maybe not the high because momentum confirmed this move. Okay. I'll take it one step at a time. Back under 60, maybe 53 or so. I could get real bearish, but Roger, that's just, I don't want to be Nostrapinkered all the time. All right, here, $34. Write it down. Anyway, I'd be happy with mid-50s on a trade like this. How about you? Oh, you asked me a question on Twitter. Yeah. And I sent you a Van Morrison song. So, yeah. Van Morrison. Why must I always explain? Yeah, so I was joking around with you. And yeah, I'll be honest with you, I get tired of explaining at time. I'm, not the most patient old man, right? Sometimes I am. Blake is always patient. Otherwise, they would have blown me out of here a long time ago, right, Blake?
Patient.
You weren't, if
Patient.
you weren't patient. How are you?
We,
It's Friday. I'm good. How are you
guys,
doing?
we're partnered up with Steve. We are patient, right?
Oh God, I'm so glad Steve is, one of the partners because, at least, I have company in being an interrupter.
So
Look how quiet Steve's being.
The best company.
Oh,
we're in the Christmas spirit. So how'd that pound trade work out too, Blake, yesterday?
I'm still long. I actually picked some up, down here at 25, and I was going to spin out of it at 60, and I'm like, I wanted to give it a little bit more room because I think that this is pretty big pivot. I made it as a chart of the day yesterday, and it's interesting. I was reading J.P. Morgan's analysis this morning, and I'll read it for you really quick.
What was your maximum drawdown pips wise from your entry?
I guess.
Because what did it
35 maybe?
That's yes.
But it's a small. If you guys don't know, I'm nibbling right now on positions.
All right.
All
right. So you know what? That's what I'm saying. And it worked out. Okay.
Well,
so
no, I'm still long, so it doesn't. It's not. It's I'm not out yet.
Yeah.
But I was reading J.P. Morgan's technical analysis this morning, and it's funny because it says the latest pound setback has reached key supports in form of minor 38% retrace, Fibonacci retracements, which that's what I noted yesterday on the chart of the day, which we're going to determine whether the setback is only a temporary one in a still intact uptrend or whether the accumulation phase since August, September is already completed, which would call for a much deeper pound setback. The key support to watch this context cuts in at 130.10 to 129.86, which is the 38% pivot in cable are equivalent to 85.38 in the euro pound. As long as these pound supports are defended, the broad pound uptrend might still be missing one more thrust, whereas a break of the pound supports would have paved the way for a deeper setback, which I agree with. So, basically the JP Morgan's noting the exact same thing after they read my chart of the day yesterday.
Yeah, the FX Cole said that JPM's copying you.
Yeah, they
Don't laugh about it.
like
it is quite likely.
Well, I mean, they read my stuff. They know I'm a I'm a client, and
yeah, that's right.
Morgan,
Yeah.
so
They should at least send you a Christmas bonus.
No, but like remember when I did the Aussie New Zealand long on Real Vision, and it was my only Real Vision appearance that I did, and I did an Aussie New Zealand long, and here I'll grab the chart here. When I argued for, it was the summer, right?
I remember it.
And it was right here. And it was before, no, never mind. It wasn't. It was spring. It was spring. It was right here.
Yeah.
And it was right here. I did a piece on the Aussie New Zealand on China trade, change in differentials, RBA.
4th of April is the day they published it. So you did
what was that?
4th of April is the day they published it. So it was like 3 days before that, I think, that they recorded it, something like that.
So it must have been this. Must have been this move. Yeah, it was this move right here. And it blew out, up here. And yeah, I recorded it right, like as we were breaking out. Anyway, Goldman Sachs did a piece right after that, citing everything that I just cited on the Real Vision piece. And it's funny because I know they watch, they see us on Twitter, they read everything, they watch everything. It's not like
it's one of the most plagiarized industries, I think, in the cosmos.
Well, yeah, I mean, when you're searching for ideas in the market, when the market's just not doing a whole lot.
People claim them as their own.
Of course. Of course.
That's what I mean. It's like plagiarism, isn't it?
Yeah. The day after the Real Vision piece came out, their analysis came out. And, the good news is that it actually completed at 108.50, which I was talking about eventually. So, but we got a really nice move out of that. But anyway, that's neither here nor there. I was joking about the JP Morgan thing, but I mean, this is not it's not a, like this, I had one guy, I forget what his name is. I was looking at a long-term trend line. It was a trend line in the S&P. And I don't even follow the guy on Twitter. And the guy's like, oh, now it's my chart. I'm like, okay, it's your chart. Because that trend line is completely oblivious to anybody else. I mean, and the same with JP Morgan. I mean, look, it's a 38% retracement. This is after these impulsive moves, it's a 38% retracement. It's a breakout point. It's big. Let's not dismiss the fact that this is big support here. And I agree with everything they have to say, and actually, because they're much better writers than myself, they're much more eloquent.
I remember Todd Gordon was having actually a legal issue with someone who said they invented the Gartley and harmonic patterns. And yeah, I actually interviewed the guy who was hassling Todd.
Do you remember what the name of the guy is?
I don't know. He was in a wheelchair, and I don't remember his name. I interviewed him a few times, but after I heard that from Todd, and really Larry Pesavento is one of the first guys that worked with harmonics anyway. Yeah. So, people, it'd be like me saying, oh, 3 drives, I invented it.
Yeah.
These are things that happen naturally in the universe, and it's just maybe someone discovers something. But
yeah. And by the way, I worked with Larry back in 1996.
Yeah. Oh yeah. You told me.
Yeah. I sat with him for 2 weeks in 1996. So
nice guy.
Yeah, he is. Anyway,
All right. Anyway,
uh,
no
the-
one used a 3 drive. It's mine.
right, right.
Okay.
It's definitely yours. You can have it. So speaking of 3 drives, we're at the S&P. We're at the 161% extension of the last move lower in the S&P. As it
Oh, that's a 300th drive.
is
up
it
there.
yeah, it's like the 300th drive is exactly what it is. We're grinding higher towards the highs here, and we are actually at new highs. 161% extension of what I have here comes in shortly. But let's look at one of the things that I want to look at is, and I meant to do this yesterday, is look actually at the index itself. So the index, let's do this. This is the S&P, index, like the, cash index. So we still have a little bit of room here if we really want to extend out to 161% extension of this is the last year, remember, last December sell-off. We still have some room to go as far as the S&P goes. So I look at the equity markets and they are just nonstop, rallying into the new year. And I don't know if it's going to stop. I'm sure everybody's like, man, when is this craziness going to stop? I don't know. But let's talk a little bit about the euro, and then we got to talk about the Canadian ahead of the retail sales. We do have GDP numbers coming out too. So here's the euro dollar, and the euro dollar is testing the 50% retracement. This is remember this dotted line. This dotted line is a big deal. This is the multi-year trend line, and I'm not going to be able to zoom all the way out. I guess I can on the 4-hour. No, I guess I can. I can go all the way back to 2017. But you'll notice that retest might actually take us down to this channel support. This is minor channel support. You can see here's the upper end of the channel. Here's the lower end of the channel. That would take us down to 110, roughly 75. So we might be able to get down there because the euro flushed the stops through the 111 level today, and I don't think it was anything other than just just taking out some stops. But we are going to probably be trading at this 111, 110, 70, 75 level before we get any type of meaningful bounce. That's what I would think. Like I said, the cable's finding a little bit of support here. This is pretty key as far as the cable goes. If you're long, I don't think there's any reason to be adding unless you get back above 131. You get it back above 131, then you got a shot back to 133, 134. But for right now, like I said, this is you're trading counter intraday trend. And Chi in our chat room pointed out this is going to be a pretty ugly weekly candle. I mean, look at the weekly candle here. That's dark cloud cover. If you're not familiar with it, it's a pretty bearish development. But it is the cable coming off of some impulsive moves. So, I don't know if I'd want to get too bearish here, but at the same time, it doesn't look pretty. Just keep that in mind if you're trading it on the long side. I'd keep stops tight and position sizing small because, you're fighting a uphill battle at this moment. Aussie's pretty strong, and it's holding up pretty well. We're heading out to the 200-day again. The Kiwi is holding up very well. Kiwi is underperforming a little bit, probably due to the Aussie New Zealand bouncing off of this support. I was going to buy it last night, but dollar Mexican peso, has a little bit of support down here. But I want to talk a little bit about the Canadian. We have Canadian retail sales coming out. Now, remember, the dollar CAD is at a multi-year trend line here. Multi-year. Boom, 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 right? So we are at that trend line, and I'm going to just say it out loud, and so everybody hears it. Below 131 is very bearish. So let's just get that out of the way. First of all, below 131, this would be ridiculously bearish for the pair. All right. So let's just think about that for a moment. That is a bearish event. But we are in a descending wedge, and we are up against a really big trend line here. So if the retail sales out of Canada is weak and we have a stronger GDP number, now let's look at the data that we have coming out. Oops, let's see here. Let's go over here, calendar, data flash. So, retail sales out of Canada, 0.5% is what the market's expecting. And, this is November retail sales. So it's going to be interesting to see if these numbers can come out better than expected. Housing price index is supposed to come down a little bit, but GDP 2.1%. If that GDP registers a little bit of a hot number, and then you got to watch PCE too. This is one of the Fed's inflation gauges that they're watching. If these numbers come in better, the retail sales come in a little weaker, we could see that dollar Canadian spike back up towards 132 again. Are we going to go very far? If you're looking at the dollar Canadian, you're going, are we going to, 133.50 today? No, probably not. But that doesn't mean that the risk reward doesn't favor longs right here, because it does. I mean, I know if you're trying to buy it right now, at 131.40, ahead of data, I don't know if I'd want to do that. But I think above 131.50, then your risk is 50 pips, and if you're looking to swing it back up towards the 200-day moving average around 132.50, it's a 1 to 2 risk reward ratio. It's not the best, but it's not it's not horrible. The thing is, and this is what we all should take away from the markets whenever we look at them, is what is my risk and is it defined? If you can have defined risk, that's the most important thing, understanding where your risk is. One of the other things I need to talk about before I turn it over to Steve and Stelios this morning is I have to talk about gold. Gold is very, very strong. And I know I did my chart of the day was silver 2 days ago. Remember, if you guys are not Forex Analytics subscribers, first of all, you get analysis on these 30 different instruments and all the basic technical analysis every evening, unless I happen to be out for the day. 95% of the time is me, okay, that does this analysis at the end of the day. I do post a chart of the day, Monday through Thursday, and at least you can get that if you're not a subscriber of Forex Analytics. Chart of the day was silver, and I noted how very strong silver and the precious metals are. I mean, look at silver's breaking out of this descending wedge, and it's at its highs of the session. Look at silver; it's just squeezing. Gold is very strong as well, uncanny like strong. And I don't know where the top of the equity markets is. I don't, but I would say if there's anything that can sniff it out, it's probably precious metals. Or in other words, if stocks actually start to roll over at some point, whether it's today or 2 weeks from now, I think these precious metals are going to explode higher. They are not going down, and that in itself is worth noting. When you have an instrument that is defying logic, that's something. And right now, with yields going higher, looks like bonds might start selling off, yields going higher, stocks are going higher, the dollar's not really doing anything, but the gold market should be down right now, and so should silver, and they're not. And that's the thing that I know I state this case quite a bit, but I'm just telling you, above 1500, you can see I have all sorts of alarms set up here. I have an alarm on this trend line. I got an alarm sitting at 1495, 1496, because I want to be notified if gold is breaking out, because that's going to have a very big impact on the FX market, in my opinion. And I think a lot of that's going to be due to, or it's going to be in the form of yen strength, because, and then you'll get a dollar yen failure here at the 109.70 level, which is this is one of those other things that I know we're all looking at it. We're all going, wow, man, stocks are at all-time highs. Why isn't the dollar yen trading at 111 or 112? And I know Coach and myself, we ask that question every single day. So anyway, I think it's just a couple things that I wanted to bring to your attention. Remember, it is GDP, PCE, Canadian retail sales, a lot of data coming out. This is going to be really the last big data move that you can expect ahead of the Christmas holidays. I know a lot of people are packing it in this weekend. We will be broadcasting Monday morning, but after that, we will not be broadcasting for the remainder of the week unless something crazy happens, because Tuesday will be a half day in the equity markets, which will be Christmas Eve. There's going to be nothing after Christmas going in, but the markets will be open. If we have to call an impromptu meeting webinar, make sure that you follow Forex Analytics on Twitter. Do you guys all have at Forex, and it's just at Forex Analytics. No, that's not what I wanted. Hold on. At Forex Analytics, Twitter. Everybody should be following. Gosh, no, that's. Hold on. If I can spell. There we go. Okay, so here's Forex Analytics, the Twitter, and I'm going to put it in the chat box, because if we decide, hey, there's something really interesting happening in the market, we need to be in front of the computers, we'll tweet it, right? Steve, Stel?
Absolutely, and we're also going to send our subscribers will also receive a push notification to their phones. So
yeah, exactly. So and you'll see them in the form of bell notifications right here.
Yeah, they come on your phone.
Yeah,
well.
You'll get an alert, push notifications on your phone. So if we have to do some sort of impromptu meeting because the market is doing something crazy, we will do that. So so just everybody should know that we are only a few minutes away at any given time. Whether it's for me, I've got so many alarms set up on my phone that if things start moving, I notice. And then plus, these support and resistance levels, when they're tripped, your mobile devices get pinged too. So I know it if something's moving.
Isn't that nice? So you could just go on and enjoy your holiday, and you don't even have to pay attention.
Yeah,
the guys will let you know.
Exactly. So Steve, Stelios, I'm gonna turn it over to you guys. Hey guys and gals, if for some reason you're checking out for the holidays, Merry Christmas to you, Happy Hanukkah, if that's what you celebrate, Happy Kwanzaa, whatever it is you celebrate, Festivus. Happy holidays. And I want to welcome you, or I want to say all my best to all of your family and friends, and I hope you have a wonderful holiday season. So
nice, Blake.
Thank you, Blake.
Thanks, guys. I'll see you on Monday. I'll be here on Monday.
Okay.
All right.
I was going to start crying. How about you, Stel? Stel, you make Stel and I cry.
I'm happy, you know that.
I know.
All right, guys. Have a good one.
Good morning.
See you later, Blake.
Bye, guys.
Everybody.
Good afternoon, guys.
Hey, Dale. Yes, it is afternoon here. So we're getting close to the holidays. Obviously, next week is probably going to be even better than it is this week. So, and I always tend to be very careful and cautious about holiday moves, market moves. They tend to be in low volume and tend to reverse a lot. So, I wouldn't.
Period of the year to manipulate the market with a few hundred million, you can make it do whatever you want.
I wouldn't read too much into next week's price action, unless obviously there's a big catalyst of some sort. Okay, so let me start with our favorite subject, Brexit. We have today in, I think 1.5 hours from now, we have the vote in the House of Commons where they're going to vote on Prime Minister Johnson's plan for the UK to leave the EU on the 31st of January. So that, remember, was voted upon
More abysmal Canadian data.
Sorry.
Minus 1.2% retail sales versus 0.5% positive expected.
Yeah, that's awful.
So the US data came as expected, with the exception of GDP deflator just a little bit lower than expected. But
Yeah.
Canadian data
blew out of the falling wedge. Blew out of it.
So let's have a look at what USD CAD is doing. Yeah, there it is. It's accelerating higher.
Yeah, nice bounce off that zone, right?
Yeah.
Yeah. Let's have a look at it on the 4-hour.
Yeah, this has now been quite a string of numbers, of bad numbers out of Canada. So I think,
Yeah, I mean, we've had in 3 weeks everything horrendously miss, like, in coordination.
yeah,
Started from the abysmal jobs data and went on with whatever data we got since from Canada. Everything was really, really, really much worse than expected. So yeah, there it is.
I think a test of 133 is probably coming sooner rather than later.
Yeah, it is likely. It is likely. I mean, we're breaking out here, so I think that 130, 150. If we retest it, is probably a good buying area and a good risk reward opportunity against 131, these lows. So go ahead, Stelio. Sorry, but we had the data.
No, no problem. I just noticed Andrew has a USD CAD long tip as well, so that's doing okay. So I was saying, yes, we have the vote today for the agreement, the withdrawal bill, the withdrawal agreement bill. Sorry, all these words. And well, Boris Johnson is expected to push it through because let's not forget he has a majority.
Yeah, and the first majority.
Yes. So that's expected today. We also had some data out of the UK. Actually, it was encouraging data for once. GDP of Q3 came in at 0.4%, expected 0.3. So that ticked up. So, we're not quite there with the technical recession. I mean, we need 2 negative quarters, but it seems to be hovering above zero. So that's encouraging, given everything that's happening. What else did we have? That was about it. I mean, we had again confirmation that Nancy Pelosi is going to delay handing over the impeachment case to the Senate. It's funny because the Democrats had been saying, "Oh, this is an issue of urgent national interest," and the impeachment happened, and now they're delaying it. So
another delaying it, yeah, of course.
Because, like we said yesterday, they know that you need 2/3 of the Senate to vote on it. And that's really never going to happen.
No,
I don't think it's going to happen.
It isn't happening. As simple as that. And
yeah.
they know it isn't happening. It's just a charade. Personally, I said it since the very, very beginning. I'm not sure that it's. I mean, they want to use it as like
negative campaign,
bad publicity, negative campaign trick. Personally, I think that it has a huge chance of backfiring. So I'm not sure that they're thinking smart about it, but
I'm going to have the Nancy Pelosi call you.
Okay.
But you know what, Steve,
so you can straighten her out. Okay, bro.
Okay.
I think you're absolutely right, Steve, because it could be seen as like Trump calls it the witch hunt, right? He keeps saying, and people might get swayed the other way. So it is a double-edged sword, like you very well said.
I mean, let me say it oppositely. People that already hate Trump, which is a big base of the Democratic Party's voters. I mean, either they impeach him or not, nothing is going to change for them, right? But some of the people that are on the fence, like undecided or whatever, they might eat up, the whole story that it's a witch hunt, etc., etc. So they might get like angry and vote for him. Definitely, that will strengthen his base. So people that voted for him before and might not be, very happy. They might like find a new reason to want to vote for him, like, oh yeah, you see he's counter establishment because the establishment is trying to kick him out of the presidency. So I don't really see the benefit for the Democratic Party. I don't know exactly how they're thinking about it, but I don't really see the benefit.
Our friend Jim correctly says, it's being delayed also because they don't have an agreement on rules and how they're going to allow witness, or if they're going to allow witnesses. I mean, that all, thank you for that, Jim. That all points to it being like a non-starter to me. So I think if the market doesn't pay attention at all to it, I mean, you haven't seen stocks do anything in reaction. Actually, they've been rising. So I think the market thinks quite rightly.
It is a non-event, and it will end up being a non-event, to be honest.
Yeah.
Speaking of which, Stelio, we also had the announcement for the new chairman
Bank of England chairman.
Yeah.
Andrew Bailey, ex-chair of the FCA, the Financial Conduct Authority. I have a lot of stuff to say about him, but I don't think I will.
But nothing is good.
He was responsible for a lot of stuff after the crisis that happened. I will say no comment and move on. But yeah, that's who's going to be replacing Mark Carney. And frankly, I'm happy that Carney is going to be out, because he's been uber dovish from day one. And
where's he going next?
I don't know.
He's like a ball player that goes from team to team.
Yeah, he gets paid well, I guess.
Maybe Trump picks him up.
Yeah, maybe.
To be honest, he's perfect for Trump.
Yeah.
I mean, this guy just wants to cut rates and do QE. I think it's like a.
I'll better be careful.
It's like a natural response for him. Even if you put him in charge of, I don't know, the best economy ever, we had on the planet, he would still be looking, to find the reason to cut rates and do QE. So I think it's Trump's man. I mean, yeah. He's perfect.
Okay, I don't have much else to say, so we can carry on with whatever you want to show.
Don't just count your pips, count your blessings, everybody. Have a great weekend.
We have things to talk about.
I know, I'm kidding.
Okay, so and we actually have quite a few questions today.
I have eggnog in the morning, man.
You do, huh?
Yeah, spiked.
You guys are being quite nice. Pelosi is still in the political hack. Who isn't? Unfortunately, the impeachment has already blown up in their face.
Oh my God! Carney has a job.
Carney has been appointed as UN Special Envoy for Climate Action and Finance. Oh, okay. Let's see what they're going to think of next. Okay, perfect. So we had a question about CAD yen, and I'm going to start from that just because we just had Canadian data. Okay, so CAD yen got rejected once again from this resistance area. So is that like a very bearish signal? I would have to say not yet. I mean, obviously against that resistance, it didn't make sense trying to be long. But we have already made some progress here. And somebody can easily just isolate this move higher and say that it has mostly corrective characteristics, which is correct, right? But that doesn't mean that it can't expand even further to the upside. We have already broken through this triangle you see here in purple. We then corrected lower in what was clearly a corrective move. I mean, I expected the move higher, but we got rejected once again from there. So I would have to say that in the short term, if you're looking for, what you need to be doing here, is that, I would be, let's make it like this intermittent. Okay, so I would be looking at this trend line support, and I would have to say that as long as we remain above it, there is a chance that, this move can expand further higher. But if we bridge through that zone, I think we can start seriously considering the possibility that this rebound higher, which, as I said, didn't really have impulsive characteristics, is over. In which case, for example, if we take out like 82 to the downside, I think we will be seeing more weakness from the pair. So 83.50 is the resistance, 82 is support. Anything in between is more or less noise. It's not my line of business. I mean, I'm not a scalper, as you know. I'm still short the Euro NOK, which is actually doing great. I'm actually considering ahead of the Christmas to take some profits here because we're exactly at the 50% fib. Although my first target is at 985, but it's already like almost 1.5% in the money. So I think that has been moving nicely, and I do like how it looks to be. This leg lower seems to be impulsive. So I have already moved my stop loss just above this previous low here, so it's a little bit in the money. So this is a risk of this is a trade without a risk anymore for me. So I think it's one of the good movers, and USD NOK is also still moving. My other position is also moving nicely to the downside. I mean, there it is, almost reached the first target I had here in mind. As I said, I might take some profits today ahead of the week of holidays, because you never know what happens. Liquidity is going to be thin, and anything is possible. Now, good morning. Could you another one for CAD yen? Yeah, we just had a look at it. Good morning. If we expect an expansion of Fed's balance sheet due to repo at year end, then why don't we expect that to have an impact on FX next week? Because in general, the expansion of the Fed's balance sheet, which has been huge, I mean, the pace has been amazing, hasn't had an impact in FX for various reasons. It hasn't had an impact, I should add, yet. Okay, and a testament to that is the DXY, right? I mean, we've been expanding the balance sheet, and the DXY, gave us like a little false breakdown here. But in general, as you see, it remains within this ascending channel, currently approaching another area of resistance. This 97.70, 97.80 is an area of resistance, so I would pay closer attention to that. So I don't think that, especially the week that's coming, is going to have any movement due to fundamental reasons. Anyhow, the market has, been ignoring fundamentals for quite some time. So I don't think that's going to change during the Santa Claus week. So I don't think you should take things like that into consideration when we're talking about like time frames like of a week or whatever. And when it starts mattering, as we've said before, it's going to matter, and it's going to matter a lot. Blake, big reversal in the euro pound. Yes, we did talk about the reversal in the euro pound. And I actually, if you remember, I said immediately that after we had this first day higher, I said that I think we're going to hit 86. So I still think the same. I mean, even if we get a pullback towards like 84.50, 84, I doubt it. That since we pushed higher, I doubt we're going to see 84, but we might see like 84.50. I think we're going to see at least one more leg higher towards, at the very least, 86 cents before we move lower, if we move lower. So, regardless, even if we are to remain in a downtrend, I'm pretty sure that 86 is going to get hit. As you remember, I was also equally sure that we would hit 130 once we got that one day lower in the cable. Gregor was here, and I told him that, I believe that, now that we're reversing, no matter what, euro pound is going to hit 86 cents, and pound USD is going to at least test 130. So we got one of them happening. I think we're going to get the second one happening as well. And the question is, what happens from there? I mean, pound is already here at the 130 mark. So what happens from here? We might rebound. I mean, this is an area of support. There's no question about it. So, being short, selling it exactly here makes no sense, right? Where would you put your stop loss? Above there and against, 130, which is support, and targeting what? The next area of support, which is at 127.80. I mean, you have like, a risk reward that is asymmetrical, right? So it makes no sense. So bottom line, if you didn't short like, the highs or, near the highs or the beginning of that reversal, you're either flat at the moment or you're making an attempt, as Blake is doing, to buy it. It makes sense from a risk reward perspective to want to buy it here. I mean, we might easily get at least like 50 pips of upside as a reaction. So that's what I think about it. By the way, speaking of that, pound yen had also a very impressive reversal from that support resistance area, right? I mean, we touched it on the day of the elections, and then we got that beautiful evening star formation here, and now we've bridged back below this trend line. So definitely we have a correction as well, approaching 141.50. 141.50 is support. So let's see what happens from there. But I wouldn't be surprised to see a deeper correction lower for those pound pairs. I mean, we're gonna know quite soon. The cable is already at 130, which, as I said, is the first major area of support. So we're going to know if this is going to be a shallow retracement or something more than that. We're going to know very soon. Okay. The S&P has a screw trade to the upside on the 4-hour. Yeah, the S&P is, I mean, so far unstoppable, but everything has started turning extreme in the S&P. So I believe that in the short term, we are bound to have some type of a corrective move lower. I mean, if not this week, which is likely not to see it this week because the Santa Claus week is notorious for for being positive for stocks. At least in the first days of the year. Keep in mind though that although we've had this non-stop grind higher, as you see, the DSI at least doesn't show extreme levels. I mean, obviously 82 that we see here in Nasdaq and the S&P is a very high reading, but I mean, we've seen more extreme readings than that multiple times in the past. So, I wouldn't try to fight it just yet. I'm also focusing a lot, as I've shown you a few days ago, I'm also focusing a lot on this pitchfork, which has worked perfectly for me for years. And as you see, we're getting very, very close to that pitchfork resistance. Currently, like 25 handles higher from where we are. So, it is what it is. I mean, we might continue this very, very slow grind higher for the few trading days we have left before we come back for the new year. And I think that the market should, produce some type of a corrective move lower following that, and we can see what type of a correction we're going to get. Why S&P not going down? Yeah, the reason S&P is not going down is because volume is very, very thin. Liquidity is very, very thin. We know that we have this passive non-stop bid that comes mostly from companies buying back their stock and central banks. So with very little actual investor participation and the constant passive bid that comes through mainly those two sources, it makes sense that we have this grind higher. As I said, I wouldn't expect like a big move lower in the days ahead before we, traders come back to their desks for the new year. And, then I think we're going to see some type of, at least, a correction lower. I mean, at the very least, I would expect this 131, the 3160 previous resistance to be retested, but probably I would expect something even deeper than that. But as I said, don't try to fight it during this week. It makes no sense. I mean, they can keep squeezing the index higher with very, very little money thrown at it. And so it's, the environment is not exactly what you want to trade. In your view, what is a good level to buy gold and Euro Kiwi? Euro Kiwi, I don't know if I would be buying Euro Kiwi. I can answer before I even pull the chart. If you want to be buying Euro Kiwi, you do it right here, right now. And the reason I'm saying that is because it's in the precipice of a breakdown from this triangle, right? So, it doesn't look good. It doesn't look good. It has been trapped in a range, now trying to break through this, larger triangle. So I wouldn't be buying Euro Kiwi. I would be more likely to sell it than anything. At some point, we're going to get some type of a rebound higher, but we might get that type of rebound, like another push lower, like a retest of this triangle, and the continuation lower. We might get something like that. Now, having to do with gold, I mean, gold is, in my opinion, a great investment if you're looking to hold it long term. There's no question about it. Now, if you're talking about a shorter term trade, would I be buying it right here? No, because it's on top of a confluence of resistances. 50 DMA, this descending triangles, trend line resistance, and this horizontal resistance area. So you want to buy it? Buy a breakout from 1490. That's going to give you conviction that the next move higher has begun. Or alternatively, if we get one more move to the downside, I would be a buyer at 1430, 1435. I would be buying it there. So any of the two, but we're on top of resistance, as I said. So buying it here makes no sense if you're looking for a short-term trade. If you're looking for a longer-term trade, I think that gold is going much higher. I think the exact same thing applies to silver. And if you look at silver, here it is. Let me perfectly redraw this trend line for the week. Okay. There it is. So silver is contemplating a possible breakout, but I wouldn't trust that if gold isn't breaking out at the same time. I mean, I wouldn't be, taking like very seriously a daily close, fractionally above this trend line if gold is not following. That's why, especially for silver, I would feel much more confident if we see a daily close above 1725, 1730. That's when I would feel more confident that, the move lower is over and done and we're headed higher. The same thing with gold. Daily close above 1490, I think, we're going to be moving higher and we might actually do it, faster than people expect. That's what I think about it. There was somebody else asking about copper. I've mentioned copper multiple times lately because we had initially this breakout from this descending wedge. We then had a clearly corrected formation. We bridged through that as well. I would be very careful though here because, as I've mentioned multiple times, the target, since we broke out from there, was 285. And as you see, we're very, very close to it, 285, right? So, it has already made the easy part of the move likely. So, you have two options here. Either sell it against like 285, put a little bit more than that to be on the safe side. And, it's going to be a good risk reward trade for a move at least to retest this horizontal support area at 272. Or, you want to chase it at least, wait for a confirmation that it breaks through 285. That might give it, new strength to push to the upside. So that's what I think about copper. I mean, the easy part of the move is already done, and there is also the possibility that this was just another corrective move, right? I mean, it's not unlikely because let's make it in blue. Let's see. So let's draw a parallel to this trend line support. right? And you can see here that, more or less, especially if you want to take that into consideration, we have a perfect channel here. So, confluence of resistances. So I would be very careful here. I would be very careful. The great opportunity for buying copper was when we were breaking out from this pennant. That was actually an excellent trade. Now, as I said, I think the easy money has been made here. So, you need to be more patient. PLF0. Okay, what is that?
Are you gone? Oh, it's me. My internet connection is unstable.
Might be the case.
Yeah.
PLF0, or you want to PLFO. What is that? What is that ticker? Oh, I can't find any of that. So what is
Platinum,
that?
I'm thinking platinum's my guess. January platinum.
Might be platinum. Yeah, okay. Let's have a look at platinum and palladium. So platinum, here it is. As I've said multiple times, I'm paying very close attention to this trend line here in platinum.
Do you know that my song use less leverage went platinum last week? I have it hanging on my wall, man. Use less leverage when you trade the markets. Use less leverage and use wider stops. Ta-da! I'm telling you, that's it's selling like hotcakes.
So platinum, I want to say daily close above 957 to to feel better about it. Until then, I would be very cautious. Now, having to do with palladium. Now, palladium has already broken through this. So I think this little rebound is not a bad opportunity to look for some type of a continuation lower, okay, for a deeper corrective move. Definitely remains extremely strong, but I think it definitely needs to also take a breather and, a much bigger one than it has already done so. So I think that, if we get this move going, we can, up with the escalator, down with the elevator, we can easily retest this 1820 area in, just a few days. So I do think that palladium is not a bad risk reward opportunity for a deeper correction towards 1820. Is USD CAD price is going back into the pennant? Okay, let me see what you're talking about. Let's go on the 4 hour. Oh, you mean it's pulling back? Yeah, okay. Yeah. That's a nice opportunity for you to buy it then. A nice risk reward from 141.50. I mean, nothing is certain in the market, but
that's why you take partials.
But one thing,
have a big pop like that.
Your risk management. So if you buy it here, right, and you